Hey everybody, it's Brandon with the Forex Street, and just wanted to give you a quick analysis of a future trade that we may have in the Signal group on Telegram, and it's for New Zealand dollar versus Japanese yen. And I always like to start off by exclaiming that this is a demo account, and I'm not asking or telling you to take trades with live funds. Forex is a risky business. You trade at your own cost. So we are going to be looking for a short or a sell on New Zealand dollar, Japanese yen. So if we look, always start at the monthly chart. This is August so far, and we look like we've had a nice down month so far. So looking for a little bit more expansion, maybe to take out these lows right here. So we got stops resting here. So I always like to start with a clean chart, kind of get a fresh perspective, and just to show y'all how I break down the charts. Go to the weekly chart. We had highs right here that they took out, equal highs. What's this high? This high is 83,729. It took out barely here, and then they rejected. So if they're taking out this stop, the stops to the high. Now we're looking for them to take out the stops to the low. So last few weeks, so we had this wick, they took out the stops with this up candle, came down, a nice expansion down 2 weeks ago. Then last week it was very small, a small range. So usually what happens with small ranges is small ranges beget large ranges. So before you see a big move, you'll see little small ranges. So similar to here, you have these small little candles, and then boom, So we're expecting the same thing really this week. So if we go to the weekly, like I said, this is our longer term target. So that's about 400 ticks away. So knowing that, let's look on the daily and see what we have going on here. So on the daily, the first thing I see is this down candle right here. So to me, what this down candle is the last down move. So in down moves, if you refer to previous videos I've done, the banks buy when the price is going down. So as this was going down, they were buying. So they caused this up move to take out the stops, right? So now they're back below this level. So they bought all in here. Now they're back below it. So now they're going back up to this level to mitigate all of the buy orders that they had in here. And we saw a nice rejection. I think that's what, Friday, Thursday, we had a nice rejection. It came back up there and it failed, right? So this week, I'm definitely looking for lower prices. We tried to get in last week. We got in up here, came down, but it started retracing. So we closed the position shortly after, or I'm sorry, here. This is, I think this wick, it went down some, but then it came back up. But we still managed to get some profit. So this week we'll be looking for lower prices. So I know this is all macro charts. These are big, weekly, daily, monthly candles. So obviously you want to get an entry with small risk and large reward. So if we go down to the 4 hour, we have came into this area, which was the daily block, and we came down, came back up, came down, and then we broke down right here. We broke market structure with this 4 hour candle. So this broke structure right here. So now price is activated to go bearish. And what you look for is you look for price to retrace. So price retraced, and what did we come into? We came into this nice breaker candle right here. I love this right here. That's so pretty to me. So this down move where they're buying led to this up move, right? And the thing is, what kind of makes me a little bit nervous about this trade is they didn't take the stops, right? They kind of just left equal highs up here. But what I've noticed is that when the market's very strong and the market's trending one direction, it doesn't have to go back. It'll get those later. So say it goes down for 400 pips and it wants to go back up, then those will be targets in the future. So it doesn't necessarily have to go above and take out these stops. So what I liked about it was how it respected this breaker right here. So this last down candle before this up move, right? We got below it, it came back and it rejected hard, right? So now I'm looking, and these are my first targets right here. These lows right here. So that's, 80 pips, but we have lower targets than that. So how do I get on board? We've already rejected. It's shown me that price is respecting this breaker. So from my analysis and doing, looking over hundreds of charts and examples and charting out examples, whenever we hit a breaker like this and it rejects hard, what it does is it takes the stops, the next stop. So the next stops would be below this low right here, which is 38 pips. And if they get those lows, they're going for these lows based on higher time frame analysis that we just looked at. So if we go down to the 15-minute chart, don't see anything too clear. We have, it could come back up here on the 15-minute chart, but I didn't see anything clear when I first looked at this 15-minute chart. So I went down and dug a little deeper, and I love to see stops getting taken and then a rejection. That's the best type of setup because, they're faking out everybody and you can get on board with the crowd. So I really like these little this like short-term high right here, right? So what I want to see is price to go and take out these highs. And if we go down to the 5-minute chart, what do we have right here? Okay, we have a breaker. So those two black candles right there, the last two down candles where the banks were buying before they ran it up here real fast. So after they ran it up and they went down below here, the banks are underwater. So all the buy orders that were used right here in this down move to take it up, they're losing money on those. So what they're going to do is, my hope is that they'll come up here into this breaker and mitigate their losses. So they're going to close all the buy orders they had up here. And they're going to add shorts. And they're going to take out these stops at the same exact time, right? So everybody is getting their stop loss hit and they're adding positions as everybody else is getting out of the trades. They're taking the opposite side of the trade, right? So if you sold up here and the price is going down, you put a stop loss here, that's a buy order. That's really what it is. So when they go over here, they are taking out your stops and they're collecting more sell stops, or they're collecting more sell entries. So they're going to be selling up here. So we want to sell with the banks. So we really want price to go up here. It could just come and hit that. We can put our stop right here, which is not that much risk. 30 pips for about 400 pips reward. It's pretty good. But I'll give a better signal on where we want our stop loss after I see a nice reaction from this level. And we'll be expecting lower prices. So that's what we'll be looking for here on Monday and going into Tuesday. They could just drop it a little bit more and then finally spike it up off of news or something like that, fake everybody out, and then drop it. So we'll be watching for that. If you would comment on our Instagram and share our post. If you have any friends that would like free signals, let them know about us. Send them our Telegram link. Thanks. Bye-bye.